until 2008, technology stocks basically had a 7-8 year bear market of going nowhere. That meant in 2008 valuations were absurdly low. Now valuations have come up since 2008 for technology stocks, but they've only really appreciated along with earnings. Earnings have also come up, and I think you still have pent-up investment demand. Pent-up spending. Right. Among corporations. There's also, I think, research opportunities right now. Companies are spending an increasing amount on innovation, on development, and it's playing out in the numbers. So if you ask me why we like any company, it's generally because they're making increasing amounts of money every year, and margins are expanding, their products are showing increased adoption. We're seeing a wave of technology stocks that are going through that right now, probably associated with things like cloud computing that are removing the costs of developing and innovating, allowing smaller players to come in and unsettle incumbents. Honestly, we look at a wide variety of companies. In terms of some of our favorites are lying right now in the software area. You've probably heard of some of the talent management software companies like Taleo or Connexa. We like these companies because from the point of view of the purchaser, they're very scalable. They pay a per user per year license. So there's not a lot of upfront investment cost, and it can scale along with the businesses. We like it from a business perspective because it provides a revenue model with a very foreseeable pattern, right? There's a long-term predictable revenue stream and profit margin. And it also meets some of the other criteria I talked about. It scales, margins scale as the businesses grow, and I think the increasing acceptance of technology as a way to manage human capital is very much increasing across enterprises, large and small. OpenTable also is one of those network effect type companies. The more restaurants that sign on to use OpenTable to manage their internal restaurant reservation books, and the more diners that then use OpenTable, the more difficult it is for a new company to come in. Think about it. If you're a restaurant, you want to go where all the diners are. If you're a diner, you want to go where all the restaurants are. OpenTable has monopolized that industry with exclusive agreements with restaurants where they're running their restaurant reservation book and they're difficult to displace. We saw OpenTable have some of the same problems in trying to expand internationally that protect them domestically. There's a big first mover advantage. Now, could competitors come in with a different model? Sure. I mean, there's companies like Groupon that threaten OpenTable to the degree that they also seat diners. In terms of head-on-head competition for restaurant online reservations, I think OpenTable has a lock on the market. The stocks come down to low 80s from almost 120 at the peak. I think it's a great opportunity to be buying OpenTable. I think the operating leverage that's inherent in this business continues to be misunderstood. They're spending a lot of money in adding restaurants, and as that matures, the cash flows of the business are going to increase very significantly.